Hey everyone, Frank Verney here. Welcome to another edition of Real Estate Help by Frank. The government shutdown doesn't seem to be close to any resolution, so what effect will it have on the mortgage market? Well, home loans could be held up if the government shutdown that began Tuesday goes on for too long. Since most loans take between 30 and 60 days to close anyhow, most experts say that a short shutdown, say a week or two, won't have too much of an effect. However, if it drags on, lenders will likely have to delay some closings. The vast majority of mortgages made are backed by Fannie Mae and Freddie Mac, which aren't completely affected by the shutdown. Although the FHA, which is part of HUD, has said it will keep processing federally insured loans through the shutdown, the agency is currently operating at drastically reduced staffing levels. There will be a limited number of exempted FHA staff available to underwrite and approve single-family home loans, so the underwriting and approval process will definitely be much slower than normal. But the biggest stumbling block to closings during the shutdown is likely to be the IRS. When lenders process a mortgage application, they pull borrowers' tax records. Banks have grown more dependent on the IRS transcripts, which verify a borrower's reported income, to ensure that they won't be forced to repurchase a mortgage should it later default. Now, the IRS won't be able to respond to those requests during the shutdown, so this is where the biggest holdup is occurring. If a shutdown lasts longer than 2 weeks, the mortgage market could face other hardships. The FHA, for example, could run out of funding authority, making lenders more cautious about approving FHA-backed loans. A longer shutdown could also have unintended further consequences as well. For instance, home sellers may hesitate to accept offers from buyers with FHA loans, fearing closing delays. Government workers that have been furloughed could run into trouble making mortgage payments, which would further slow our housing recovery. But by then, the housing market would have a lot more to worry about anyhow, because Congress will need to vote to finance the nation's debt. If they failed to raise the debt ceiling, it would likely have far-reaching consequences for the housing market and the economy as a whole, which would likely dwarf the inconvenience of any form processing delays. Now, consumers that are concerned about loan closing delays should check with lenders to see what rate lock extensions may be available. Now, if you or someone you know are considering selling, buying, or could use some help in any real estate matter, contact me, Frank Verney, and I'd be happy to answer any questions and help in any way I can. If you found it interesting, please like and share or forward to someone that can use it. I'd also appreciate any comments below or subscribe for further updates. I'll see you again soon. Thanks, and have a great day.